Making the simple complicated is commonplace. Making the complicated simple awesomely simple. That's creative. Charles Mingus. My friends, that is what we work toward here every day. Every day I look at the market, I think about how can I make the process of following price movement simple. Think about what we are trying to do. Is a given stock or ETF going to go up or down? Now, sideways, that can be part of the question, but in the end, really, is it going up or down? And when has that movement stopped? When do I get out? That is really all. It's a binary decision, yes or no, buy, sell. That's it. Each time you look in the marketplace, that's what you're trying to do. You're trying to do that consistently well. And the beautiful thing is if you follow the method that we teach in those two latest videos, I'm going to put them at the end of today's video, and then I think I'm just going to take them offline after that. If you've not taken using the average true range and the always winning, I think it's called the always winning strategy, if you haven't taken those, it is life-changing. I really feel like it is. Take those and tell me if you think I'm wrong. It will give you confidence. It will show you that you don't have to win every time. It will help you come up with a predetermined way to set profit and loss bands. And then the beautiful thing about it is, based on the volatility, you shave down your X trade, that's your typical trading amount, to make sure you take care not to have volatility hammer you and to use it for your profits. And you will find that you only have to win 4 out of 10 times to make the strategy work. Now, the more you win, the better, but 4 out of 10 times is good enough. Good enough for making around 2% a month on 10 trades. 4 out of 10 times. I want you to practice trade that, see if it doesn't work. Look at the math, figure it out. It is absolutely beautiful. It will change your whole concept of what you're trying to do here. And the better and better you get, the returns go up and up and up. Practice trade it. See if I'm wrong. I'm right. Let's move on. Let's see what's going on in the marketplace. Everything is down for the day. The biggest downer for the day are bonds. Next to that is the Nasdaq 100, and then the S&P 500, then gold, then Bitcoin, and depending on where we look at Bitcoin. In fact, if we look at GTC, we see that actually it's up a little bit for the day, as are the Bitcoin futures. New York Stock Exchange Bitcoin Index showing down a little bit for the day. So overall, Bitcoin pretty much flat. But let's jump into the S&P 500 first. Down 1.26%, almost said up. We have a red up candle. It's an open box candle. What's it showing us? A slowdown in all of that up movement. I told you guys to keep an eye on the blue line. That is the price percent oscillator. It was crossing earlier in the week a lot stronger going up. It's weakening as the market was weak today. And we have what was a green, now is a red open box. It's a slowdown in the up movement. Price percent oscillator still green. Derivative oscillator still green. Price percent oscillator still trying to cross over. And let's look at where we are on the 2-day. Now, as we look at Monday and Tuesday, we have a red spinning top. That means indecision tending down. Price percent oscillator is positive but flattening. Derivative oscillator positive, losing upward momentum. We look at the half day and we can see where things in the S&P 500 peaked back on Tuesday of last week, and then starting on Wednesday afternoon started deteriorating, down Wednesday afternoon some, Thursday morning and afternoon, Friday morning and afternoon, popped up on Monday, then rolling back over and tapping somewhere near the most recent low on Tuesday afternoon. Consequently, price percent oscillator heading down, derivative oscillator getting a little downward momentum. So we'll continue to keep an eye on things. Remember, The importance of the weekly vertical crossover is that it occurs, and if it doesn't occur and things weaken, roll back over, what do you have looking you right in the eye potentially? Well, that would be a 2-day recross going down, allowing you to short the S&P 500 again. So just watch. Watch, see, let the charts guide you. It's all about paying attention to the signs. They will tell you what to do. Let's look at the Nasdaq 100. Down for the day 2.22%. Still a green open box candle. Price percent oscillator still crossing over quite nicely. Derivative oscillator heading up. That's the weekly. Of course, we don't call it yet because the week's not over, but what do we see on the 2-day? Well, we can see we blew through the trend line on this latest candle. It's far outside it. It is a doji, a red doji, and we see the derivative oscillator positive losing momentum. Price percent oscillator, again, losing some of its upward shine. We look at the half day, very similar to the S&P, down then up, then down again. Again, pushing right through that 200 period exponential moving average line going down. So we'll keep an eye on things. Price percent oscillator, derivative oscillator heading down. So stocks are showing some weakness. Are we going to have a weekly vertical crossover? We don't know. We don't know yet. And that's all right, friends, because it's not the end of the week and the candle's not drawn yet. So we'll see how things go. We're ready for either way. Either we have a weekly vertical crossover and we're ready for those continued up moves, or it dies and we're looking for a 2-day recross going down. Either way, we'll let the market guide us. We can't force the market to do what we want. We bend to its will and are happy to make money either way it goes. What about 20-year bonds? They're our biggest downer for the day, 2.26%. Red down candle forming, not hitting the low that we saw on the week ending the 25th of March, but that price percent oscillator tracking down, derivative oscillator still losing some downward momentum. Red down candle, not a big one like those 2 big down weeks, but heading down today, we see where it's bouncing off the red signal line. And again, after 2 2-day candles, 4 days of spinning green top up movement, we see where things have turned into a solid red spinning top going down. Price percent oscillator likewise bouncing off that red signal line. Derivative oscillator still not really gaining red, still losing some of that. That's from those 4 days of oscillation upwards. Half-day chart had that crossover at actually the beginning of the day, and we will redraw our trend lines, or our half-day trend line, and we see that derivative oscillator really heating up at the end of the day as things cinched down. So that is where we are on bonds. Again, regaining some of that downward momentum. Now let's move on to gold. Gold hit its high, as we've said over and over since it occurred, back on the week ending the 11th of March. Sliding sideways and down since then. Price percent oscillator positive, but heading down. Derivative oscillator positive, losing upward momentum. Today, this long sideways slide underway with that derivative oscillator continuing to be negative, losing downward momentum. Price percent oscillator continuing to head down. And we see how some indecision in the morning and then rolling over in the afternoon as again, gold heading down. So what are we waiting for? Well, I'm waiting to trade gold again, but don't know it's going to happen anytime soon. We'll continue to watch, wait and see. Let these charts lead us. That is where we are on gold. And you know, all gold has to do to strike fire again is for that 2-day recross going up. But it continues to pull further and further away from that red signal line. Lastly, we go to Bitcoin. And again, depending on where you look, Bitcoin up a little bit for the day. And for Bitcoin, a little bit is a little bit. We know the kind of volatility Bitcoin can have. Now, we had a weekly vertical crossover end of last week. We can see, I'm just moving it out of the way so you can see the wick on the top of that candle. This candle much smaller and not much of a wick on top, but above the weekly trend line. That's good to see. Price percent oscillator heading up, derivative oscillator green and gaining momentum. Today, this is where we see where things peaked when. We talked about this last week as the week was wrapping up on the Tuesday, Wednesday, the 29th and 30th of March. And then we saw that Thursday, Friday candle slowing down, and then of course the Monday, Tuesday slowing down a little more as the price percent oscillator flattens. Derivative oscillator losing momentum, still green. We look at the half day, and again we can see where things have rolled over and again just continued to move down. Let's look at our futures candles on the half day. Again, a little bit more accurate because it's reported throughout the day. Up in the morning, losing a little bit in the afternoon. Price percent oscillator heading down. Derivative oscillator negative, losing some downward momentum. XBTF up for the day, 0.22%. So a little less than 0.25%. Nothing for Bitcoin. So we'll continue to watch and see how this continues to develop. The weekly vertical crossover is still in effect, and we will be waiting to see how Bitcoin catches fire, which is what I'm hoping it will do. If you want to learn to trade Bitcoin, you need to practice trade it, because otherwise it'll eat you alive. That's where we are, folks. Don't forget, Patreon members tomorrow, 12:30 Eastern Daylight Time, our live question and answer call-in session. Check your show note. Well, check your emails. You will see the invites there, how to get into the meeting. Can't wait to have you. Go ahead and send me questions that you're interested in having answered. And also, feel free to send me stocks and ETFs you'd like us to help you backtrack for practice trading. Happy to take a look at them. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.